Today we're going to dive into one of the few companies in my portfolio that doesn't pay a dividend. Anybody who watches this channel knows that I am a dividend investor through and through, so the companies that I own that don't pay dividends are very few and far between. Today I finally bought one that I've had my eye on since, I couldn't even tell you, it's been forever, and that company is Amazon. I've been ordering toothpaste and various knickknacks off Amazon since around 2009. It was trading at $6 a share. I didn't buy the stock back then, and that was a mistake. So instead of making the same mistake again, I decided to buy it this year. I bought it at $151 a share, which at the time was around the all-time high. And, it is difficult to buy things at an all-time high mentally, but you just need to remember the fundamentals have changed. Something has changed in the business. It's time to buy it now versus in the past when you didn't buy it for whatever reason. And for this company, there's a very particular reason why I have never bought it. And that is the capital expenditure of this company. For years, I've been looking at this balance sheet and wondering what the heck are they doing with their CapEx, because they are spending just an abnormal amount of money investing in different businesses, side businesses, a lot of which are not profitable. So it was hard for me to really mentally get over this hurdle, because they were taking in, like, the revenue year over year is just absolutely absurd. It goes up every year, obviously, but the numbers, you can't even pronounce some of these. Obviously you can, it's a bit of an exaggeration, but they're so high that it's absurd. So why isn't it being reflected in the balance sheet? They're making investments into electric cars and robots and factories, and they're building out their shipping fleet. That is the biggest capital expenditure project that I'm actually in love with, because they are rivaling UPS and FedEx now. They're delivering so many packages in North America. Another CapEx expenditure was their robotics. I don't know. They're advertising their robotics on their Investor Day presentations, and they show robots going up and down the factory floors. They claim it saves man hours from human employees. I'm sure it does to an extent, but I don't think it's perfect in this iteration of them. But one day I think it's going to do well for them. But that's just another example. It's just stuff like that, that they're kind of investing shareholder money. And some of the projects I just didn't like, so I couldn't buy the company, even though the rest of the numbers looked good. Another thing that I didn't love was that they're still issuing shares. Amazon is kind of a mature company at this stage in the game, and they're still issuing shares year over year. I don't love that, to be honest with you. It's not a ginormous amount, but it is a steady uptick. Okay, so there was a couple things that stopped me from buying this company, but one thing has just changed, and that is Amazon decided to pull a lever and start charging a lot of people a lot of money. You may have seen it on your screen that Amazon Prime Video users will now have a $2.99 fee to enable them to access ad-free viewing. Okay, so Amazon could do this with a bunch of things. Many companies could. Apple could do it, Google could do it, Microsoft could do it. They could just add a subscription fee to something, one of their in-house products. They can just add this fee and people are just going to pay it. So this $2.99 is going to equal an absolute ton of money. So they can do these little things and start showing shareholders that they're turning a corner. They're going to do things that are more profitable for the shareholder, not to an extent that's going to scare away customers. We're talking $2.99 for a video service that's just thrown in with Amazon Prime. Who's going to argue with that? If you don't want to pay it, just watch a couple ads. And those ads are going to be so profitable because Amazon has all your user data. They know what you order, so they can sell their ad space to advertisers who want to really, really target a specific group of people. So they're going to be willing to pay a lot more than, say, an ad on a random website that we're looking at right now. Poof, they just created so much more, millions of dollars in total revenue per year just from that little lever that they pulled. The biggest streamer is Netflix. They charge around $20 a month for their entire library. Amazon just added $2.99 a month for their service out of nowhere, okay? That's not nothing. Currently, I have a 1% of my total portfolio invested in Amazon. If management starts making more of these really, really exciting decisions in the future, I will buy more and I'll increase it up to a total of 5%. But we'll see what they do. Right now, I'm very happy with my 1% position. It's up just over 10%. Great. That doesn't really matter. I'm a long-term investor. But these are the reasons that I just bought Amazon and I haven't in the past. Let me know if you guys have this one in your portfolio. See you next time.